Hi, everyone. Welcome to Scouting for Growth. Today, we'll be welcoming Tristan Pelloux, an expert passionate about FinTech and innovation. After several years in corporate strategy and finance at Virgin Money, Tristan decided to launch Strategwhy, an independent management consultancy focused on scale-ups and startups and helping them shape executable strategies. He's also the Chief Pencil Officer of FinTech Review, an online media focused on the FinTech industry. On this episode of Scouting for Growth, we will be targeting everything FinTech. But let's start with a few stats. There are more than 30,000 startups in the world, of which almost 10,000 startups are in the EMEA. When you think about FinTech, global FinTech funding reached, some say, $75 billion in 2022. Others say up to $100 billion. And I think it depends as to whether you involve or include the smaller investment deals, making a 46% drop from 2021, but up to 52% up compared to 2020. CB Insight shared in a recent State of the FinTech Review World. In the introduction of this podcast series, I also shared that there were over 100,000 FinTech startups out there, and some will probably disappear this year. But 30% of these ventures get investment funding from investors. And if you consider all the subsectors within FinTech, including InsurTech, HealthTech, WealthTech, to date, over $675 billion have been poured into FinTech ventures. And whilst the market is resettling, we'll see how those ventures are raising more funding this year or maybe going through M&A or other form of transition. Today, we will cover with Tristan a few points. I wanted to know Tristan's path from Virgin Media to becoming now a FinTech resilience expert supporting scale-ups and startups. Then I wanted to look into FinTech into more details and some of the disconnects that exist maybe between high net worth clienteles and mass market customer segments. I also will ask Tristan about FinTech challenges and opportunities for growth right now. And we'll cover a little bit of fundraising and future plans and scoping to see what Tristan thinks about today's situation. If you enjoy listening to this podcast, do not forget to subscribe to it, rate it, and provide a comment here below. If there is a topic that you feel needs addressing, just send me a message using the channel option listed below too. So let's welcome Tristan. Hi, Tristan. Welcome to Scouting for Growth. It's so great to have you here with me to talk about FinTech and finance. Welcome.
Thanks for having me.
So, Tristan, I love starting this discussion with a little bit of insight about who you are, where you're coming from, and what you are doing today. Can you enlighten us?
Yeah, sure. So my background is in the corporate world. After business school, I joined the strategy team at Virgin Money. So doing corporate strategy and corporate finance, trying to figure out what would be the impact of innovation on the business, doing M&A deals, strategic partnerships with innovative startups and technology companies to do digital transformation in financial services. Mm-hmm. So I did this for a few years. And then I subsequently launched a couple of businesses, one around media in FinTech. So FinTech Review, it's an online media. And another one called Strategwhy around management consulting towards technology companies, so fintech companies, but also like SaaS and like other types of technology businesses.
So let's unpack. So it's fascinating you're actually combining the two, right? Media and the consulting world into, I would say one bucket. Can you tell us a little bit more what that entails? The media side of your work and the consulting side.
Yeah, sure. So the media side I launched first at the beginning of 2020 because I was producing lots of insights for Virgin Money and then spending a lot of time trying to figure out what was going on in the world, the trends, innovation. And I realized that it was a shame that the audience was so small within the company. So I created the media at first to spread my thoughts about what was going on. And then it evolved over time from a personal blog to now it's more of a platform. I do write every now and then, but it's mostly other people sharing insights about various things happening in fintech. I also do interviews of business leaders and entrepreneurs in the field. So now it's a way for me to channel my interest into fintech. That's more, let's say, it's more my passion work. And then I do consulting, which is more my I get to pay the rent work, where I work with lots of companies mostly across Europe, and helping them on their strategy, helping them scale and reach a new level.
So where are you located? Can I ask you? Where are you?
So I spend most of my time in Barcelona, Spain. So not so far from the sea. So I decided at some point that London was fun, but wasn't fun anymore. So after 6 years in London, I've decided to spend more of my time here, but working with people, like, as I said, across Europe. So I do travel quite a bit around Europe.
Yeah, here and there. So let's dive into Strategwhy. And as an advisor, I'd love for you to tell us a little bit more what you do every day with the startup you're working with. As you know, I work as well with scale up and startup and corporates. And, today with the current economic circumstances, commercializing, scaling, growing in the right way is very important for any organization. So it would be great if you could unpack a little bit more. What are the challenges you see within the startup and scale-up world? How are you actually helping them make sense of what is happening and the results you can achieve with your work with them to pay the rent?
Yeah, so I think as you say, the environment is very different now than it was 2 years ago, where let's say it wasn't easy to scale, but funding was more present, so it was easier. Let's say it was easier to scale. So I work with companies that go from a few people, like very early stage businesses, all the way to much larger businesses. And at the moment, the challenges are a bit the same for everybody. Is that it's a bit hard. Well, on the startup side of things, now I guess it's a more challenging environment to raise funds, because you need business models are a bit more proven. Before, it would have been easier to raise funds on an idea like that is not really well formed. Now investors are a bit more wary, and they will ask for a bit more traction, a bit more proof behind what you're trying to do. So this is where I think what is important right now, and this is where it's important also for corporates, is strategic focus. And which means, instead of going in many directions at the same time, okay, let's do something very well. So let's launch this product. Let's launch 5. Let's go after this niche, this segment, instead of going after 10. So this is where I'm trying to helping businesses with strategic focus and execution. So I think strategy execution is even more important than it was a few years back.
I'll tell you a story. Once upon a time, probably 10 years ago, I interviewed with a tech company, a very well-known tech company. I was transitioning from one to another. And the CEO of that tech company read my CV and said to me, "Oh, you're a strategist." And I said, "Okay, I don't know whether it's good or bad, but I said, yeah, I start with strategy, really understand the problem, the topics that need to be solved for, and then I start unpacking, right, and looking at the outcome. So strategy is about understanding the problem, and then looking at the outcome, and then I build a roadmap, and then I execute." And after my discussion, my interview, it was very odd, I'll be honest with you. His chief of staff says, "Sabine, really like you, but he doesn't like strategists because the thing they're in la la land." Just like, well, strategy without an execution is no strategy, first of all. And secondly, you can't just keep on thinking tactically. What I realized is that tech company only grow through acquisition, M&A. So they're very known to do M&A. And so it's interesting, right? Where once upon a time, we talk about strategy, but less about the execution. But there is no way you can actually do strategy without execution. That's what investors are paying for, right? So my question to you is, how do you do that every day? Because I think you need a lot of structure in thinking and focus to be able to do strategy well. And what you highlighted just now is don't go after many ship. You just go for one and actually do it very well now because of the current economic circumstances. Can you tell us more?
Yeah, sure. As you say, I think for me, strategy is a lot about like being organized and project management. So it's about trying to organize things and so I like to work with people that have lots of ideas. So then I help them channel them, build this into a plan. Okay, you want to do this. Okay, how do we do this? So it's about breaking down problems. And so what I do, I use a lot the OKR methodology, so objective and key results, as a way to organize things. So, okay, our objective is this. Okay, what does it mean in terms of key results, in terms of KPIs? And then, okay, how do you get there? So breaking down into tasks. So this is what I do a lot, is that I am Mr. Organization. I like to-do lists, I like tasks, I like plans, because this is how you do things. And this is how, so what I do is with most of my clients is that I organize things, is that, okay, let's talk twice a week. This is the agenda of the meeting. This is what we're going to do this week. This is what we're going to do next week. Okay, let's talk about the things that we said we would do. So this is a lot about like maintaining order it doesn't mean that you can't be inventive, you can't innovate. It just means that you need to channel things and do it like in a very planified way. Otherwise, as I said, a lot of energy is going into many directions and you're just losing time. Because if, for instance, you have company, you're 10 people and some people do the same things, or you're starting going into a direction but actually it doesn't match with what the other person is doing, then you're just losing time. But if everybody's aligned, everybody knows what's going on, there is a clear plan, and then you divide the tasks between people, then you achieve much more.
Yeah, absolutely. So I just thought, listening to you, it'd be great to maybe dive into examples. I mean, I know that you're working with larger companies and smaller ones. So it would be great if you could maybe share with us some memorable experiences working with corporations and startups, so that we can better unpack and understand what that means to be into Tristan's world.
Yeah, sure. I think so. For instance, when I was working at Virgin Money, when you're working in a big, 10,000 people company, when you do a project, you have lots of help on different things. So if you do like you want to launch, I worked a lot towards the end on the launch of a loyalty program. And then when you do this on this project, you have lots of people with their expertise and they help you navigate certain things like compliance. You would have a compliance expert, like technology, you would have like a bunch of good technology guys. And And then when you step into a startup, then it's very different because obviously you don't have as many people. You need to things go faster, but it's also a bit more challenging. So, for instance, so last year I worked with a scale-up called Colvin. It's an e-commerce scale-up, and they were doing a couple of acquisitions in France and Italy. So I was helping them doing the integration of the acquisitions. So I had done post-merger integration when I was at Virgin Money, but it's very different when you do it in a high growth startups where things move a lot faster. And so you're trying to do a plan, but the plan might evolve a lot. Whereas when you're working in a big corporate, you're doing your plan, it's going to be executed. It's not going to move in the next, 18 months and to 2 years. When you're in a startup, things move a lot, and you still need to execute your plan. But it was super interesting to see you can do the very same project, but in two different environments. It's going to be, you're going to need much more adaptability in a startup, and things will come and things will change, the assumptions will change, and things, and the also the goals are very different. It's all about growth and all about trying to go much faster.
Yeah, startups are all about growth and scaling, and yes, it's always walking on shifty grounds. And so it's interesting you are making a comparative with corporates as well, because they have more resources, they have more time, and they also have more structure and I think constraints where everybody needs to be on the same page before you can move forward. In the startup world, usually decision making can be much more flexible and quicker, and so it's really always interesting to look at those two comparables between big corporates and small players. So when you look at fintech today, what are the biggest challenge you see us facing? I know we have approached and touched upon some of them, but looking at, for example, the M&A work you are just doing, for example, now, what are the fundamental needs of the customer, which as fintech we need to pay attention to? What are the challenges you think we are facing now or might be facing in the future to fulfill the needs of that customer?
Yeah, I think so. Obviously, fintech has boomed. Lots of companies have come to market, a lot in the B2C space. I think one of the challenges is that there are too many going after the same customers, and there is not enough money to be made out of a retail customer. And when I see so many neobanks, I'm like, yeah, sure, but what are you doing? Are you just making money out of interchange? It's not enough. So this is one challenge, is that it's a bit crowded in some areas, which means that, it's great. Well, it's kind of great for the customer, but it's also confusing because there's so many players and it's fragmented. So instead of before, maybe you were having everything with your bank and it was crap, but at least everything was in one place, rather now you have to go through, oh yeah, why don't you download another app? And you're like, yeah, I don't want another app. I already have 5 financial apps. So I think this is a challenge, and we see lots of fintechs try to battle to be that super app, and we'll see which one are going to emerge. But also so many of them don't have a decent business model, and they're still loss making and they're not profitable, which means that it's going to be challenging for them to go out of that scheme and being more, okay, we're actually a business. So with less funding available, as you say, we've said before. But I see lots of opportunities in the more difficult business to business space, helping businesses scale, especially at a time where it's a bit more challenging. So helping them better manage their cash flow, getting the right financing. So this space, I think, is quite interesting. But I think for a lot of fintechs, it's going to be very difficult this year and next, because they're not going to. It's going to be down round for some of them. It's going to be no funding at all for some others, where they're going to just, maybe there's going to be some consolidation, because some assets are going to be cheap, some customer portfolios are going to be cheap. So if you're in a good position, like I see some fintechs are, then for them, there's going to be lots of opportunities to scale faster through inorganic growth.
Yeah, it's interesting what you are saying because yeah, there are going to be down rounds. I was checking some of the fintech numbers, and what I realized is, there are 100,000 fintechs out there, and only 30% still before COVID had raised money, and the numbers have not changed. And so what I think I see as part of the patterns within fintech is that there are not many new companies being built right now, being funded. In my industry, which is InsurTech, there are 0 new created startup at the moment, at least registered ones. And at the same time, when you look at, we are in February already, the market has raised over, something like $500 million, which is not 500 million, it's not very much. And that money has gone to the bigger companies, the one with a already secured business model. Younger ones are not really receiving yet much funding, but as you said, because the valuation are down, what we find is companies are waiting to see whether they should raise later. If they can't wait, you have some which actually are disappearing, going for M&A. And then the youngest one are, whilst, they have a good valuation, it doesn't mean that they are going to be able to get the funding because investors are much more scrutinizing those presentation and financial metrics and partly making sure the unit economics are making sense. So Tristan, looking at the world we are, moving into right now, who is today the perfect, I would say, fintech customer? We heard a lot about mass market, the mass market trend of created by the, the wealth simple Robinhood, and I'm sure eToro and so on and so forth. What is a customer we are going after today? And you mentioned that some companies, a lot of them are going for the same customer. How do we differentiate when you work with those companies between the mass market customer and the high net worth one?
Yeah, I think the line is blurry right now, because it used to be that, yeah, of course, like more on the high end of the spectrum than it was private banks, and because customers were looking for a personalized experience and some kind of service that for the provider, it only made sense to provide to people that can pay for it. But with technology now, you can actually deliver like a good service going further down into that mass market. So it's actually quite interesting, because some services that were not economically viable to provide to that market now are, through the use of technology, which is then the line is blurry. Is that at which point are you going to provide like some kind of personalized service if actually you can do it for cheap? So then it feels like this kind of customers who are getting a lot of attention now, it's pushed to like being really like only a few customers, because providers don't want to provide because they're like, oh, okay, actually we can increase our return on investment by just automating a lot of things. And so it's like relationship managers are disappearing, because why would you do that when you can do like chatbots and automated stuff? But at the same time, you also have a new generation of customers that are, maybe they're not actually looking for relationship managers. They actually want, just an app that works well. And so I think the customer behaviors are changing with the influence of a lot of other sectors are changing the way we just consume, and it's much more digital. So I think that it's quite interesting, but at the same time, I feel right now, this mass market has access to a range of tools, a range of investments. You can have like a very diversified portfolio right now. And it wasn't possible 20 years ago to be invested in so many asset classes. But now with ETFs, with a lot of stuff, it's quite cheap to have the kind of portfolios that was only for high net worth, like maybe 30 years ago. And now you can have real estate, you can have whatever you want, you can have gold, you can have oil, you can do like very like complicated strategies. But at the same time, I feel the gap in the market is that we leave people to their own choices, and sometimes it's not the right ones. And so you mentioned Robinhood, and then people go for very complicated products, they go all in crypto, and it's like, yeah, no, you should have a diversified portfolio. But the providers don't explain that, they don't help people to do that, I feel. And so now it's a lot of people getting their savings wasted in stupid bets, and I feel this is really a shame, and it's a real gap in the market.
Yeah, and we heard about FTX, and funny, this morning I was doing my usual, going into looking the news and tweeting some stuff, and there were some news around FTX as well. So what's your view on this specific company, or what it represents in the digital currency world? And you mentioned people having their saving taken away by platforms because they were not well educated. What's your view around FTX, and actually the need for better education, financial education?
Yeah, I think FTX has shown that whether people like it or not, crypto needs to be more regulated, needs to be regulated in the same way as other financial service providers are, because we've seen it was a complete shambles, that there was no compliance, there was no records of anything. Money was taken from customer deposits to invest into startups, to make personal bets, to buy houses. It was like complete disaster. And it's just, I think it's a wake-up call that, okay, now it's over, the fun is over, let's just regulate this part of the industry, which for me is just part of financial services. They don't want to, but yeah, it's part, like, okay, let's bring it and let's regulate all that in the same way, because otherwise you can't let people, because then they do ads that are a bit confusing. People feel, oh, it's like a bank account, it's like a regulated stock exchange, but no, actually nothing is regulated, and then you lose your money, and then these people are going to turn to regulators and governments and be like, hey, where is my money? What has happened? Well, we haven't regulated this part. So, so I think it's just, of course, it's one bad apple, but it's to show that actually this needs to be better controlled. There need to be rules around what you tell customers. The funds need to be protected. There need to be rules also around advertising, which is not the case right now, because you see like guys like Shaquille O'Neal saying, oh yeah, FTX is great, then people invest, and then actually now Shaquille O'Neal is saying, oh no, actually I didn't know what it was. Yeah, but you did advertisement, you took money from it, and then people bought on the basis that you were recommended this product. So all this needs to change, in my opinion.
Yeah, I mean, I tend to be very careful as well around, I would say financial services or investment commentary. I try to shy away from it, because even though you like something and you think it's relevant, you have to be careful for it not to look like a recommendation. And you're right, we've seen people getting fined for supporting specific companies and then advertising them without realizing it's soliciting others to purchase. So all this, as you said, needs to be regulated, and anyone needs to be careful around that specific sphere where individuals can make choices. That's why I like working B2B, because at the end of the day, B2B businesses mean to make choices, and hopefully they have enough people together to make the right choices. So what do you think we need to do to improve that financial education gap we have at the moment? What is missing? What could we do better?
So I think it's quite complicated because as a business to tackle that, you can't only do that because it's never going to be profitable because people are not going to pay for it. And how would you like fund this? It's more like, with ads or whatever. So I think it's more businesses that provide financial services, they need to do more in terms of trying to educate their customers. So maybe, I don't know, like it can be like so for instance, when you invest into startups, you need to do like questionnaires, and same when you invest into some other things, you need to questionnaire to understand your risk appetite and the way you understand risks. And I think this kind of things need to be more common. So, but for other things, and it needs to be like part of this forced education to the customer to understand, actually, do you know what you're doing now? Do you know how finance works, how money works? And I think this, for instance, this kind of initiatives I could see working well. And then it's also for the financial service providers to invest in education, in courses, and like providing this for free to customers, because it represents a tiny investment from their perspective, but it could be a big difference for the way customers perceive money, perceive investments. So this is where I could see, because a company solely doing that, if it's not paid for by the financial service provider, it's not going to be paid for by the end customer. No one is going to pay for, well, it's rare that you would pay for education that doesn't bring you something. Well, doesn't obviously bring you something. It's not bringing you a diploma, it's not bringing you it's just your knowledge.
Yeah, it's about value creation, value exchange, I like calling it. So as we educate ourselves, we're expecting that we are going to use that knowledge to do something with it. I mean, I guess when we get older, we educate ourselves for pleasure. It's a very different matter, but still, it's value exchange, right? So really understanding the value education, I think, will be more and more important. But in insurance, for instance, where, conversion rates are still low in specific markets, so markets are more keen to buy insurance, for example, than others. I would say that some of differentiation will come through education and helping people understand, with climate, for example, why people need to protect themselves, particularly when they are in floodplains, to make sure that their assets are being protected more so than, a house which is on a hill. All this comes through education and helping people better understand how they can protect themselves. So what are the big mistakes that startup and scale-up could avoid, you think, looking at the year ahead? What would be your recommendation for them?
Well, I would say, because that's the kind of things I love, but having a good plan, not saying set in stone, but having a plan of what's looking at the basics of a business, which is, okay, what is our product? Who are our customers? What is our market? Is our market big enough actually to do anything? Because I see also companies, I tend to say it's good to go into a niche to do something very well, but sometimes people go into such tiny niches that I'm like, yeah, but you're going into a tiny bit of the market. So looking at how big is the market, who are your customers within it, really trying to find the right value proposition and testing it again and again to be sure that you have the right thing, and then building your business. Doesn't need to be profitable very at the very beginning, but having already an idea of how you're going to achieve it. So knowing when is your break even, at which point are you going to get good unit economics. And I think this is crucial now, is that you can't be turning to investors and saying, look, I'm not going to make money for the next 5 years. Just believe in me. Unless you're in a very specific niche around, I don't know, very specific AI or biotechnology or whatever, most businesses are going to tell you no, like there's no way you're selling me this, especially if you're selling your product, you should be selling your product. So that's my advice, is that to look carefully at the business model, think hard about what you want to do, execute well, strategic focus, and then think about the path to profitability.
Yeah. You know what? After your podcast, I will be releasing another podcast with Aaron Jones from Epic AI. And it was lovely speaking with him and preparing for our discussion because he's in a generative AI. So, the platform they build is avatar-led video making platform. And so you just put the text and the avatar and your picture will actually speak in the video. And it's actually really cool. You can actually produce a video in minutes. But what was interesting is reflecting what you just said, is he built a first business which fell. And he had to learn from that experience to build business number 2, which is in AI and generative AI. So a hot topic right now. It doesn't even need funding, right? Top line is doing very, very well. But really understanding the market and understanding the products and actually executing on the strategy is important. And what you realize is it will not produce things, at scale for small businesses, even though the platforms is used by small businesses. The goal is to create APIs to go into major corporations so that they can actually take the API and start doing, avatar-led presentation as sales and marketing presentation or servicing presentation and communicate with the customer in a much more straightforward way. And there is a little bit of things called, which is a bit Star Trek-y, where as we talk to each other like this, and if you were French, and I was English, even though we are both French, I could speak in English and Zoom would translate it in French for you. A little bit Star Trek-y, actually. So that's where the world is going. And I think it's very important to understand the metrics and therefore where growth is going to come from. So, Tristan, I have a fun question for you. So think about 10 years has passed, right? And so I want you to go back 10 years ago, 10 years younger. And then we are speaking. And then I would like you to put yourself 10 years in the future. I know, complicated. What would therefore be your expectation looking at where you come from and where we are going as an inspiration note for our listeners?
So 10 years ago, I was in Middle East, actually, doing an internship in banking, doing business banking, but really on the field, which was really fun. So when I look back, it's very different, like I was working for Société Générale as an intern while in business banking and going to see clients on the field, and it was really fun. Also, it's my first internship abroad, and I was going back to Middle East. Having grown up there partly when I was younger, so it was really, really good. But I would have imagined that, well, I already liked banking, but then knowing that I would be so much into fintech and having moved now to Barcelona after being in London. But yeah, I was already curious at that point about innovation and what was going on in the world. I really wanted to go to London after my studies, so which is what I've done. But I think at that point I thought I would be more an investment banker, which I haven't been. So it's quite funny. So this is 10 years from now. I wouldn't imagine where we'd be now. So it's hard to think that I would be accurate about where I am in 10 years, but 10 years from now, if I'm lucky, I'm still doing advisory to interesting companies and founders. I hope a few of the bets I've made on startups have gone well, and they're big businesses now. There is hope because I have equity in a few startups, and I hope they're doing really, really well now. I mean, jokes aside, I hope they're alive. But then, yeah, I would like to continue doing advisory, continue to be interested in innovation and fintech, and continue to work with very smart founders.
Yeah, it's interesting that you, like me, actually started in banking. You were at Société Générale. My first internship was actually à la Caisse des dépôts et consignations. I was doing some swap analysis and Black-Scholes modeling. And then I went to do my study in London too. So we have that in common. But then you are in fintech, and so still that connection to finance through fintech. And today it's about enabling the businesses of the future, which also we have in common, and which actually keep us awake at night, right? It's very busy to do that. I mean, we are working with very fast moving companies. So where can people find you, Tristan?
So they can find me on LinkedIn, where I am quite active. They can also find me on Twitter, where I try to be active as well, FinTech_review. And also I do enjoy when people drop me an email at hello@fintechreview.net and chatting about fintech, suggesting ideas of like topics that could be covered, or people that want to write, or interesting people I should interview as well. I do enjoy that. So yeah, and I encourage people to reach out, because there's nothing I like more than having very random discussions with people and coffees, digital coffees.
Yeah, well, a bit like the way we met, actually, Tristan. So
yeah, exactly.
Thank you so much for joining me today on Scouting for Growth. And I look forward to reconnecting soon, I hope.
Thanks for having me, Sabine.
Pleasure is mine. If you like this podcast, subscribe now, share with your friends, and if you enjoyed it, please give it a 5-star review. Also, if you want to cover any specific subject with me, contact me on Instagram under Sabine VdL Officials or LinkedIn under Sabine VdL. Thank you.